Welcome to 5 Reasons Profit Lies Hidden in Inventory, Why Profitable Brands Still Feel Cash Poor. We are excited to have Karlie Lester from LedgerGurus and Madison Kishun is from Finale, and we're going to keep going.
Awesome. Thanks, Kelly. Yes, I'm Karlie with LedgerGurus. I'm going to introduce myself. I kind of have a unique background. I have started and run businesses myself. I've spent a lot of time in education, teaching accounting, business, entrepreneurship, technology, and I really love helping people understand how business works, not just the numbers, but actually business itself. Over the last couple of years, I've been working with LedgerGurus and been specializing in inventory, accounting, and operations. And what I've found is that the inventory issues aren't really accounting problems, but they're really operational problems that show up in the financials. So what we love to do is help businesses connect those dots so they can look at their day-to-day operations down into the numbers, so we can actually get a good gross margin that helps them make better business decisions. So I'm really excited to be here with Madison today. We have worked with on lots of projects together and with lots of clients. We have a lot to talk about and lots to share. So Madison.
Thank you, Karlie. And yes, equally as excited to be here with you as well. And a little bit of background about me. So Madison Kishun over here, partner manager at Finale. I started at Finale about, I guess it's coming up on 6 years ago now. Started in the customer relationships area and moved into partnerships. Something about relationship building and working with our partners to find the best solutions for our clients is something that really resonates with me. And like Karlie said, helping people is kind of the core of what we do here. So working with Karlie and our clients and our projects have been really exciting and rewarding. And I'm excited to get into the kind of nitty gritty today and share with you what we've learned.
So I'm going to introduce LedgerGurus a little bit. LedgerGurus was founded in 2014 with a goal of helping people build good, accurate financials so they could run their business. And we specialize in e-commerce accounting, around sales tax, revenue recognition. We have lots of advisories, services. But what we're going to talk about most today is our expertise in inventory and COGS and how we help businesses determine what they actually don't know about inventory. So we work through them. We talk about their pain points together. We work through their processes, their operations, their tech stack. We go from purchasing all the way through fulfillment and make sure that's flowing clean down into the financials. Because at the end of the day, inventory, it doesn't start in accounting, it starts in operations. And if that foundation's off, so are the numbers. So we want to bridge that gap between accounting and operations and make sure what's reflected on the balance sheet as inventory is right, and that your COGS is being expensed correctly, calculated correctly, and recognized right, so that you have margins that actually mean something and that you can trust. So we do also like to partner with software and technology that our clients are using so we can understand how it works, we can support them and help them better, make sure we're getting those good numbers. So again, why we partner with Finale, one of our favorite softwares that we use, a lot of clients use, and so we like to make sure we can support them in that.
Awesome. A little bit about the Finale side. So Finale started in 2010. We are a cloud-based inventory management solution. We provide real-time tracking, inventory tracking across multiple channels, multiple locations for high-growth e-com sellers. We have a seamless integration with QuickBooks, and it is a direct integration, keeping operations and financials in check, giving you kind of one centralized solution to look at your inventory, operations, accounting, all of it.
So I'm going to go over the agenda for today. We're going to start with the 5 top reasons why profit gets hidden in inventory. I'm excited to go over these reasons together. And then we're going to give you a 3-step fix that can help you if you find yourself not understanding your profit and what's going on with it. We're going to give you a 3-step fix. And then we're going to discuss how inventory flows through the financials so we understand that piece, and the tools you can use to become more efficient either in your operations or in the accounting. And we'll have a good Q&A after that.
Awesome. So I will be kicking it off here. So something we hear from founders all the time is, we're profitable, but why does it still feel tight? So, sales are growing, orders are coming in, the P&L says business is profitable, but cash might still feel tight, margins still seem inconsistent, numbers don't always line up with what's happening operationally. And most of the time, the issue isn't sales, it's inventory, unfortunately. As brands grow, inventory becomes more complicated. You add more SKUs, more sales channels, more warehouses, more suppliers. And then all of a sudden, inventory isn't just a list of products anymore. It's a whole system that's connecting purchasing, operations, and accounting. So the tricky part is that every operational decision has a financial impact, whether you kind of realize it or not. So like receiving inventory affects your asset value, shipping inventory, triggers COGS, freight and duties change your product margins. But I feel like these connections often happen, behind the scenes. So today we're going to walk through 5 common places where profit gets hidden inside inventory and how businesses can start uncovering it.
And we're going to start with the first question. So the first reason, and before we go into that reason, I'd like to ask you all a question and maybe raise your hand in the chat. How many of you have seen your margins swing from month to month and you couldn't fully explain why? So you look at your margin swinging all over the place. I think a lot of people feel this sometimes, and that is a really big red flag. And a lot of time our mind will automatically go to the sales side and we start thinking, oh, is it discounts? Is it our ad spend? Is it something seasonal? Where in reality, that might be and probably is something to do with inventory timing or changes in costs. And I know that Madison can speak to that a lot better than me, but what happens to inventory that causes that margin to swing, Madison?
I mean, a lot of things, maybe it's, same product, prices change, duties increase, tariffs change, your manufacturer cost changes, a lot of, kind of different things that, if your product costs aren't being kind of updated consistently or inventory adjustments are being recorded, your margins, start to drift. And I feel like that's kind of usually that first signal that your inventory data and your financial data are, starting to disconnect. And usually happens when when you aren't kind of tracking that inventory movement cleanly. So like maybe you're selling inventory before it's actually sold, creating negative stock, or like I said, maybe freight costs or landed costs get added later, which change your product costs, after sales have already happened. Or another common thing is, adjustments get entered manually at the end of the month to reconcile the numbers. But, from the financial side, margins suddenly start to move. But from the operations side, the business might feel like, nothing's really changed. But that disconnect between what's physically happening with inventory and what's happening in the financials is usually that signal that something deeper kind of needs attention.
Yeah, especially if it's the same products, the same pricing, you have the same supplier, nothing's changed. Well, then probably should dive into your inventory a little bit. Yeah.
And reason number 2, when your landed costs get overlooked. So I do have another question for the audience here, just as a little show of hands. When you think about your product costs, are you including everything in it that it took to get your product to your warehouse?
I think a lot of people, this can be such a big thing that people miss, or it can just be hard, so it's hard to do. And when we think about coming up with that product cost, it's easy to say, well, I bought it from the vendor for $10, so that's how much it costs, right?
Right.
But we have to consider everything that it took, the cost that you spent, the expense that you put out to bring that product to your warehouse and get it ready to sell. That's why it's the cost of goods sold. A lot of people forget all those extra things from freight, duties, tariffs, insurance, packaging. And when you bring all that in, it changes the cost of that product, which can affect so many things. Most people do their pricing off of the cost, or our COGS is based on that cost. And so I love this. It says 60% margins on paper, actually 48% reality, because there's that phantom profit because of all those costs that weren't considered. Reason number 3. So question again for you. how many of you are still using inventory, or sorry, using spreadsheets to track inventory? Or even like, how many of you maybe just do it in your head or on a whiteboard, and
Pen
you're
and
just
paper.
kind of manually, yeah, pen and paper,
Mhm.
which not that any of this is bad, but how many people are doing that, right? Um, and a follow-up question is, do you fully trust it? Like, do you trust your spreadsheet? I want you to think. And I can't see the show of hands. I don't even know how many hands we have going up, but I have a feeling there's quite a few people
Mhm.
that still do that. And it does work great. I love spreadsheets. I love spreadsheets, a good old spreadsheet. And it works great for inventory. If you have 10 or 50 SKUs, you got one location, costs don't change very much. One person's in charge of it and good at spreadsheets. But what happens, Madison, as things grow in inventory with our spreadsheets?
The spreadsheets typically break, and it's not a fail overnight. It's kind of, they just slowly stop telling that, the full story there. I feel like, they, yeah, like you said, spreadsheets were great when you have, 20 products, everything is pretty stable. But as you add more products, you add more sales channels, you add more locations, your cost is changing variably, kind of with, the environment we're in today. Those that causes your spreadsheets to break. All it takes is kind of one formula to break, or someone overriding a number to make something reconcile, and then suddenly your numbers on your spreadsheet don't look right anymore. They don't quite tie out anymore.
Yeah,
And I
and
feel like that's that
you don't
moment
even
that you kind of realize.
Yeah, and you don't even realize
Mhm.
it until you see a
Mhm.
problem in the financials, right? You're just
Exactly.
going along thinking it's doing good because it's just a
Mhm.
slow thing. Then all of a sudden, oh, it's not working. Then you have to fix it.
Right.
So if you love
It's
your spreadsheets, I don't know. I love my spreadsheets,
yes.
but there might be a better way. Might be a better way. Yep. Let's see. Oh, number 4. Go,
Number
Madison.
4, no one owns the numbers. So a little show of hands here, or I guess maybe if you could drop it in the chat. Who owns the inventory at your company? Is it ops? Is it accounting? Is it a mix? I will say that I feel like we usually see a split. We usually see a split. So we usually see operations owning the units and what's happening in the warehouse. They're responsible for, receiving the inventory, picking, transferring, keeping stock moving. And then the accounting side owns the dollars. So like what shows up in the financials, product costs, all that great stuff. But then no one owns the full picture. And the challenge is that, inventories lives in both worlds, in the operations and the financials. So when there isn't a clearly defined owner, things can, start slipping through the cracks. For example, actually have a kind of interesting anecdote here. So when, costs aren't getting updated, and, supplier prices change, landed costs get added, months after the fact. Someone makes a connection or, correction. This creates, problems essentially. So a company might think their system is broken, but when you dig deeper, it's actually the fact that no one owns things like product costs or inventory adjustments. So we've seen situations where product costs haven't been updated in 8 months because everybody assumed somebody else was responsible for it. So, sometimes the issue, isn't the system, isn't the software, it was the structure around who owns the numbers. And, tools can support the process, but they can't replace ownership. So, like, inventory accuracy really starts with clear roles, responsibility, and consistent updates.
Yeah, and understanding each other's roles. I've found as I've worked with
Yes.
clients, some people, I can ask them their role and they can tell me, but they can't tell me what the other people are doing. So, the left hand's doing this, the right hand's doing that. They didn't realize maybe they're both doing the same thing, or they're counteracting each other, or nobody's doing one thing. So making sure, and then there's some finger pointing, right? And then there can be some
Yeah.
contention. But if there's full roles that everyone understands across, and it's defined, it really does help owning those numbers. Are we to reason number 5 already? Reason number 5, when there's no monthly reality check. So how many people out there are reviewing and validating your inventory numbers every single month? This we find is a really big gap with people. They'll wait until something feels off and then they'll check it. And so really making sure you keep an eye on your inventory, it's your biggest asset, is really important. But we do find this is a big big gap. People wait till it doesn't look right, then they'll get into it. It makes it harder to fix. There's errors that have been compounded over months, and it can become a big problem and costly to fix. So check it. Check your inventory.
Yeah, and from an operational perspective, that monthly check is really important because I'm sure as a lot of you guys know here, inventory is constantly changing and constantly moving. And if those movements aren't being reviewed regularly, then those small discrepancies can really slowly build over time. And sometimes it's something simple, maybe freight costs increase for a few months or supplier adjusted pricing. But if those changes aren't reflected in the product costs and the margins start drifting. And I feel like that's why those monthly reality checks are so important. It gives the team a chance to step back and ask, do the numbers that we see actually match what's happening in the business? Inventory problems rarely happen overnight. They usually kind of build quietly over time. Monthly checks are really important.
Yeah, and they can be really simple checks, like just looking at
Mhm.
your balance sheet and see if it ties out to what you physically have or is close, right? Or checking those margins and see what they're doing, seeing if there's any anomalies. So it doesn't have to be like a huge, big thing, but just a simple check helps a lot.
So we've been walking through these 5 areas, and you might have recognized a few of these in your own business. And if you found yourself saying, yeah, that sounds familiar at any point, the good news is you're definitely not alone. These are the exact challenges we see with growing e-commerce brands all the time. And I feel like the important thing to understand is that these issues aren't, caused by one big mistake. They usually happen because the business is, growing faster than their processes around inventory are. So we talked about, for example, starting with a spreadsheet that works great early on, and then you add more SKUs, more channels, more warehouses, and then suddenly inventory becomes more complex. But the good news is that these are fixable. And it's not about having the perfect data or rebuilding everything overnight. The goal is really clarity around your numbers, your processes, and the tools supporting the business. So when we work with brands going through this transition, we really focus on these 3 key steps. First, establishing your baseline. Second, fixing the structural gaps in your processes. And third, implementing the right tools to support how your business actually operates. And again, here, the goal isn't perfection, it's clarity and having numbers you can actually trust. And first step here, establishing your baseline. So the first step in I feel like fixing any of this is actually pretty simple. Before we start, changing tools or processes, we need to understand what the current state is today. And that means establishing a clear baseline here. The one way to think about it is almost like a quick diagnostic for your business. 3 areas that we look at are tracking, costing, and accounting. So first is tracking. How are you actually tracking and valuing your inventory today? For some businesses, it might be through a spreadsheet. For others, it might be looking at your sales channel data. And some teams, have a full-blown IMS to help. And then sometimes, honestly, it's just what someone remembers in their head. So the key question here is whether you kind of have a single source of truth for your inventory. And that second piece is costing. So are you capturing the true landed cost of your products? That means including things like freight, duties, shipping, customs, anything like that. Because, the real cost isn't just what you paid your supplier for the product, it's everything it took to get that product from that factory to the shelf in your warehouse for sale. And that third piece is accounting here. So do you understand how inventory is actually flowing into your financials? Inventory should be treated as an asset, not an expense, which means that the cost of that inventory doesn't hit your P&L when you buy it. It hits the P&L when the product is sold and as COGS. So a quick way to kind of check your baseline is by asking, a few simple questions here. Do I know my exact inventory count right now? Do I know what that inventory is worth? Are my product costs up to date? Am I using accrual counting? If any of those questions are hard to answer, that's usually a good signal that the baseline needs some work. And at the end of the day, you can't fix what you haven't measured. And that's exactly where this process.
Yeah, I love that first, just establishing your baseline and understanding where you're at. then it leads straight into fixing the structural gaps you might have. And this is one of my favorite things to do with clients, is looking at those gaps, because sometimes we just don't know what we don't know. So it takes maybe just talking it through with someone, or looking at that baseline to see what might be missing later on. As we talked about ownership, that's a big one we start at. Who owns the number? Who's the person? And not everyone can do it, but who's the one person that owns certain parts of the processes, right? So defining your roles and who does what, and understanding what each person does is really important. I think you'll find as you do that, you better understand what the whole company is doing in business and how it works together. Then you'll want to look at your processes. We can't put a process into a tool or bring it into accounting if it hasn't been created. And a lot of times people aren't really sure what the process is, and they haven't documented it. They haven't written it out, it's just in their head. So, well, this is what I do. Well, what happens if you're not there? Then someone does it different. So really understanding your processes and getting them written out, and some good SOPs written out for people. Processes from how do you receive inventory, how do you order it, how do you transfer it to other places, how are adjustments accounted for and put in, looking at trade shows, and then processes that lead into fulfillment and sales. If you're manufacturing, what do those processes look like? And honestly, just writing out step by step, creating some good SOPs so everyone knows what's happening. And then cycle counting is a big one. We talked about checking at least once a month. And we have some businesses that need to check more than once a month. They have a lot. And this is where cycle counting can come in. If anything, at a minimum, check and count your inventory once a year. And if you can do it monthly, or if you have a ton of inventory and it's too much, you can cycle count. And so we love cycle counting. Make sure you have this process well defined and that you're counting and checking inventory regularly. And then ask yourself, here's things you can ask. Can I name the person who owns cost updates? Who's the person in charge of cost updates? Whether that's on a spreadsheet, looking at vendor bills, or if it is in a tool, someone's monitoring those and making sure they're accurate. Do I have a written SOP for receiving? And for every process included, we'll say receiving, but is there a standard SOP for how that is happening? When did we do a last cycle count? If you're like, I don't know, and we don't have an established count or even how we do the counting, that's a gap. That's a big gap. Do we track every inventory movement? A lot of people think, well, yeah, we track inventory coming in because we purchase it, and then inventory going out for sales. But inventory leaves for a whole lot of other reasons, and those need to be tracked. So the tool doesn't fix unclear ownership. People and processes go first. So before you decide what tool you want to use, or maybe you're using a spreadsheet and you want to update it, or just come up with a better process for tracking your inventory, this needs to be fixed first, and understanding who's owned it, the processes, and how you're counting it, because that comes first, then the tool. Oh, I love this slide so much. It speaks volumes, right? Garbage in, garbage out. Meaning, if you don't have that structural, and there's lots of gaps, or you don't even know where you're at from the beginning, you don't know what's going in, then here we are as accountants or ledger gurus on the end, getting the numbers out that aren't making sense, and it's just garbage. And we find it's because what's going in is garbage, and meaning what's going in, people maybe don't understand what's going in. They don't understand that they're missing something that needed to go in. So garbage might be a strong word, but we need to make sure the data going in is actually accurate, and that everything is getting captured. Because we've said before, every inventory operation, every task that happens operationally day to day needs to be translated into a financial number and captured in your books. Because really our books, your balance sheet, your P&L, it tells a story. I need to be able to look at that and tell a story. And the story's going to be wrong if what's coming into my story is wrong. And it's interesting because I met this morning, right before this, I was meeting with a client, Donna Chai, and Nielsen told me he was going to be here today, and I hope he is, because we've been working on this. They actually use Finale, and we were trying to pull numbers from there, but it was just, we were like, these cannot be right. And so they decided to have us come and help them and work through what was getting in, what was actually going into the tool, is what's going in right. And so if Nielsen's here, and I can't really tell because I don't like, Oh, he is not here. Dang
Hmm.
it. I wanted Nielsen to maybe share what that process has been like. So maybe I'll just share what I think he might say. It's been great. We've been meeting weekly and going through all of their operations. We talk about physically what was happening and then looking how they were doing it in the tool. And we found huge gaps. Things that were happening weren't being put in the tool correctly, or they didn't even know it needed to be put in the tool. There was there was things happening that they didn't understand. One person needed to do it or the other. There was no ownership. There were no processes written out. So as we've written those processes out, gave ownership, check the tool and make sure it's actually reflecting what physically was happening. We found so much that we've been able to fix, and now we can truly look at the numbers in the tool and feel good about those and accurate, and we've got good stuff coming out. I don't know if you've had examples or experience with that, Madison, where you've worked with clients and understanding what goes into Finale or in any type of tool. It has to be good or it's not going to produce anything good.
Yes, that is definitely something we see a lot, especially as businesses are evaluating new systems. I feel like sometimes the expectation is that the new tool will automatically fix everything. But
Mhm.
if the underlying processes, you know, around, you know, receiving and all your operations and things like that, if the underlying processes aren't clear, then those same issues will just carry over into the new system. So the tool is truly only as good as what you put in it. And there goes the saying, garbage in, garbage out. And I feel like an accountant I first heard that saying from an accountant, you know, because it's so true for financials. Like you were saying, Carly, if you're putting in, you know, bad inventory numbers and bad average costs and bad, you know, product cost information, then the financials that come out of it are going to be inaccurate. And that's not helpful when you're trying to make, you know, business decisions based on those margins. Um, but yeah, I mean, that's why I feel like the first two steps we talked about are so important, that baseline and structural gaps, because before implementing any tool, you need to have good processes that your technology can support. We can't replace it, but it can definitely support.
Yeah, and you got to understand those processes. So when you go in the tool, you understand what you're putting in there, and someone needs to manage it. It's always like you said, people pick a tool and hope that it will just solve everything, which it can,
Magic.
as long as you have to still manage it, put the data in, understand the processes. Then it can be magic. It can be.
Yes.
Sure. Hmm.
And here we are on step three. So getting the right tools. So once you've, you know, established your baseline, you fixed your structural gaps that we talked about earlier, that's when technology and a tool can really start to help. And again, the right tool shouldn't be expected to fix broken processes. It should support and scale your processes that already work. And the first thing to look for is accurate tracking. Your inventory system should be able to track stock across all your sales channels, all your locations in real time. Every inventory movement from receiving to transfer to adjustment to sale should be recorded automatically. Way you're not constantly trying to manually reconcile or catch up at the end of the month, which I feel like is very, very commonplace to be. And that next piece is accounting. So your inventory system ideally should connect directly to your accounting system so your financials reflect what's actually happening operationally. For example, automatically calculating and posting COGS when inventory is shipped and syncing that data directly to QuickBooks eliminates that kind of manual process of getting that data into QuickBooks by a human essentially, and allows inventory to be treated properly, you know, as an asset rather than an expense. And that third piece is operations. So your system should really reflect how your business runs. That means, you know, supporting your purchasing flow, your warehouse workflows, the sales channels you operate on today. And just as importantly, grow with the business as you add more products, more channels, additional locations. When you're evaluating tools, I feel like, you know, there's some good questions to ask. And those are, do I understand my sales channel and fulfillment flow? Do you understand how your orders are being placed, how they're flowing into your shipping system, how they're getting picked and packed? Who on the team will own this? A big thing. Like Carly said, I feel like ownership of processes is a pretty big deal. So who on the team is actually going to take ownership of entering this data in the tool? Like we just talked about, if you're putting bad data in the tool, you're going to get bad data out of the tool. So having an ownership, having someone who is responsible for making sure accurate data is getting into your tools is super, super helpful. And then, are my operations clean enough for a tool today? Another great question. If, like I said, you know, a tool doesn't fix broken processes, it can help support your processes that are working. So that kind of one of those first two steps, making sure your baseline and fixing those structural gaps and processes to make sure your operations are clean enough to move to a tool. And then the last one here, am I ready to move beyond spreadsheets? I would like to think that most people would probably say yes, they're ready to get off those spreadsheets, ready to get out of those errors and looking at all those lines. But yeah, in the end, the right tool, like I said, doesn't really fix your operations. It makes the ones that work visible and scalable, helping your business grow.
Yeah, and I love that tools can be a spreadsheet, but the spreadsheet won't even fix if there's a structural gap or you don't know your baseline. So let's see how inventory becomes a financial transaction. I'm so passionate about this, and I know we've said it, I'm going to say it again. Every physical action in your business maps to a financial entry. And one thing I love about Finale and how it's set up is that it breaks it up into those main operational activities around inventory, purchasing, inventory, and selling. And all of those operational activities flow down into the accounting module. And so as we think about this and we think about purchasing, it's important to understand that when you receive inventory into your system, the inventory value is going to go up, right? When you have those supplier and invoices, you got to track, do we want to play it? Have we received it all? Have we not received it all? Do we need to make some adjustments there? And it's those POs and the purchasing that will actually calculate that landed cost. And it's there where you put in all those extra expenses we talked about to bring the inventory to your warehouse. It's placed on those POs. So it's a really important piece. And then in the middle, you've got your inventory. And this is where things go for stock changes and takes on your inventory. If inventory goes out, most people think of inventory leaving for just sales, but it goes out for different reasons, and that needs to be captured in the system. And operationally, people do that really well, but then they forget to capture it financially. So all of that happens, and then the cycle counts and making sure the inventory number is actually what you have. And then on the selling side, this is a big one because this is where your COGS is. How am I fulfilling my orders? Like Madison said, we've got to talk about the fulfilling, the pick, packing, and shipping. Can we make that more efficient? How are they leaving? Do I understand all the sales orders coming in? Understanding that that's the time when you fulfill that COGS is calculated, and that's what's going to flow into your financials. We need to think about returns. Anytime you have a return, is it getting put back into inventory? If so, that's going to change the value, and that needs to go into your financials. The nice thing about a tool, it helps manage that. I've seen people try to do, if we go back to the purchasing side, they try to manage all their purchase orders in a spreadsheet or calculate a landed cost. It can get really hard, especially if you start purchasing a lot or your costs get really volatile and changing a lot. If you've got a couple SKUs and your costs never change, you probably could do it. But the nice thing about a tool is it keeps that updated cost for you all the time and gives you some really good numbers. And then that cost flows into the selling side for COGS, calculates a really good COGS. And why is COGS important? It's their biggest expense. It's what hits and gives you that gross profit margin. So we really want a good, clean COGS number when we think of accounting. And all that comes down into the tool. So if your operations is good and ran right and you're using the tool correctly, it comes into accounting, makes everything so pretty for us. And remembering that every action becomes a transaction financially.
And moving on to how Finale solves this. So on the previous slide, we talked about how every operational action in your business eventually becomes a financial transaction. Purchasing affects inventory value, inventory movements affect stock levels, shipping sales triggers COGS. And that's, exactly where Finale comes in. Everything starts with purchasing. In Finale, you can create, manage, and execute your purchase orders. You can receive inventory against those purchase orders in multiple shipments if needed. And with those purchase orders, capture that landed cost. And so within the purchase orders in Finale, like Karlie said, you're able to add adjustments, whether it's for duties and freight and shipping and taxes. And if it's all of those things, we would add all of those adjustments there. That way Finale is calculating your true landed cost. And as those products are received, Finale automatically updates the unit cost of your inventory. So at any given moment, you're able to click into a product in Finale, see that cost, and that is your true accurate average cost today. And then once inventory is in the warehouse, Finale helps manage everything happening operationally. So you get real-time visibility into stock on hand across multiple locations, support for cycle counting, transfers between warehouse, inventory adjustments. Finale keeps a stock history log as well. So as inventory moves and changes, you can always audit those operations and even make those a part of your kind of monthly reviews that we discussed a few slides back. But then when products are sold, Finale syncs with your sales channels within 5 minutes. So we're pulling in orders from your sales channels every 5 minutes. And then we're also pushing our stock level back to those sales channels every 5 minutes to prevent overselling. That way, when you sell a product on eBay, it doesn't get, sold on Amazon or on Etsy or on another platform. Finale keeps all of your channels in sync and everything aligned and preventing that overselling. We also help with that pick and pack ship workflow as well in the warehouse. And we do also have barcode scanning application that helps improve picking accuracy, warehouse efficiency, reducing fulfillment mistakes. So I'm not sure people in here have definitely dealt with it, but maybe you're having, a high number of mispicks or high number of reships or things like that. And that's something where the barcode scanning tool can really help eliminate a lot of those errors and make that process a lot more efficient. And then as those operational actions happen, Finale automatically records the financial impact. So when inventory ships for a sale, COGS is recognized at the right time and synced directly into QuickBooks. Inventory is tracked as an asset on the balance sheet rather than being treated as an expense. And because the product costs in Finale intrude your true landed costs, your margins start reflecting the real cost of your products that you're actually selling. So instead of guessing what the numbers are and seeing if they're accurate, you're able to look at your financials and actually trust what the margins are telling you. So instead of operations and accounting living in separate worlds, in Finale, everything kind of flows together in one system. And that's what allows your inventory valuation, your margins, your financial reports to reflect exactly what's happening in the business. And Finale doesn't, we don't replace your processes, we run on it. And the cleaner your processes are, the more the system can support and scale with your business.
Yeah, and I want to make two comments on here, Madison, that we maybe
Please.
missed. Maybe you talked about this, but one thing as I've helped clients, a lot of times clients will come to me and a big pain point is just reordering, knowing when to reorder. And I love that about Finale or tools in general. They can help you know when it's time to reorder. If that's hard to do manually. Another thing I love about tools, and as an accountant, if I look at the balance sheet and I look at the inventory and I have this, this huge number, I need to back that up. I need to have an inventory valuation I can pull to show, this is my inventory by SKU, by cost, by quantity, and I can like prove that number almost. I can explain that story being told on my balance sheet, and it's right there in Finale. It's easy to back up, and it just really adds to your financials. It makes you feel confident in what you're showing in your financials. And you can go to Finale to pull all sorts of reports to back those numbers up. If you're using categories, if you're using, it adds so much and can open up and really tell the story of what's happening with inventory that you can't get on a spreadsheet or you can't get from your head. So I love that. I love using a tool. And so as we go to the next slide, it says, how can LedgerGurus help you? And we can read through this slide, but really, we can help a lot of people who just don't even know where to start or what they need and help them get in a tool, decide if they're even ready for a tool and what the right tool is for them. We like to help them get clean. So make sure the inventory on the balance sheet is a good number and is clean. Help you switch if you're using cash-based accounting right now, switch to an accrual base. Help you fix any errors in your COGS, your historical COGS that you might have. We can help you get really confident in making sure you have a true landed cost that is set up right. You feel good about it, that it's flowing through the financials correctly, that your product costs are updated, whether you're doing that manually or using a tool, and that we can look at your monthly margins with you, help you figure out and watch that. We can help you get compliant in different areas, sales tax and in Nexus with your filing and remittance. We're e-commerce specialists, so we can help in all those areas. We can help you get clarity on your P&L and make sure you trust those numbers, that your financials are built and are reliable to make those good decisions. So we handle the numbers while you handle your operations and your business. And one thing that we're offering now is a free inventory reality check. Because again, sometimes people just don't know what they don't know. They're not sure where their baseline is, even though we presented some questions for you to help start asking. We do have this inventory reality check, and there's a link in the chat that you can use. And it goes through, it's going to ask you some questions to help you determine your current state or that baseline. And then it's going to give you a result that tells you where you're at risk, maybe help you find where those structural gaps are. Then it'll provide you with an action plan and help you know where to start, and then give you some personalized recommendations at the end and give you just a good idea of where you're at with your inventory, where your gaps are, what you may need to do, just a little guidance there. It's a really good tool that I recommend everyone just using. It's free and you can just use it and get some good information, do a quick reality check of where you're at with your inventory.
Yeah, if anybody wants to dive deeper in how this works in practice, we're always happy to continue the conversations. We have 2 QR codes here. The first one here is to the Ledger Gurus Inventory Consulting Services, and the second is to schedule a demo with Finale. But yeah, we'd love to continue these conversations. So please, scan these QR codes and reach out, and we'd be happy to, talk about, these practices in real life and how they relate to your businesses. Think we'd love to open it up to some Q&A now. So if anybody has any questions, please feel free to drop them in the chat and we'd be happy to answer. I think we've got a few here. I'll read off the first one here. And this one is from a attendee here. I feel like I spend a lot of time on my financial inventory process. Where can I be saving time? Loaded question.
Yeah, it's a loaded question.
Yes.
I feel like I spend a lot of time on my financial inventory processes. Well, and I know, Madison, you feel this too. We do. We spend a lot on the financial and the accounting side, not realizing we're trying to figure it out from the numbers, but those numbers aren't right because what's happening operationally is wrong. And so it's flowing into so maybe a suggestion here would be, instead of looking at your financial inventory processes, stop for a minute and go review your inventory operations. How's that going? And then move back in. What do you think, Madison?
Yeah, exactly. Exactly. I mean, kind of goes back to those kind of the 3-step fix we talked about, establishing your baseline, kind of seeing where you are in your current state today. What are your operational processes? Is there any, opportunities to enhance them or make them more efficient? And are those same, inefficient operational processes driving driving all this time you're spending on your financial process too? But no, Karlie, I think you're exactly right. Kind of making sure your operational processes are clean and perfect. And then I feel like that's when it kind of flows downstream and you start saving time on your financial process.
Yeah, because maybe you're spending a ton of time trying to come up with a good landed cost, but you don't have all the right information. A tool could help there, right? Because it could calculate that. But maybe you're spending a ton of time trying to track quantities and trying to reconcile quantities between your 3PLs and your warehouse, and try to come up with a value, but you don't realize that there's no one in charge of where the quantities are in the 3PL, or no one's actually in charge of this. There's so much that this is a loaded question to me, because I'm like, well, where are you spending your time? And maybe we can add that in the chat, whoever asked that, like, what time are you spending? Is it on coming up with product costs? Is it just trying to come up with a value? Are you you've got huge adjustments all the time? Where are you spending your time specifically? Maybe we could help more. Let's say we've got another question. It says COGS, margins, and more. There is so many KPIs. Which is the most important one to focus on for my business growth? I keep going back to the operations, Madison. Like, you want to get to COGS and margins, but maybe start with that baseline and really define your business and where you're at and those gaps. I feel like we're just saying the same thing, but I feel really strong about that, because a lot of clients I meet with, they do want to grow, but they want to grow, So then we'll talk about, well, tell me about your purchasing process. And they don't have one. They're like, well, I don't know. When I need it, I purchase it. I'm like, okay, well, where are you purchasing it? Where are you tracking your POs? Who receives it? Are you checking that what you received is what you actually ordered? Who pays it? Do you just pay it, or do you make sure what you've paid for you actually received? If the cost changes on the PO after you received it, are you changing it and making sure your product? So like talking through it, then there's a
Mhm.
lot of things that need to happen before you can go to, we want to go straight to COGS and straight to margins because that's where our P&L is. We know it's kind of like our scorecard, right? Like how much we're making
Mhm.
and it's our profit. And that's what we want to know. But we skip all the other pieces that get us to a good number. Mm.
Yeah, no, I totally agree with that. It, it's sometimes it might be even hard to rely on the cogs you have or the margins you have because maybe you're not tracking your product clearly right now. So I feel like it definitely, like you said, I feel like it always goes back to operations and making sure that your processes are intact, the ownership is there, the structural gaps are resolved, and then your cogs and your margins are more reliable numbers to look at for business growth.
Yeah. And then if you do want to grow and scale, get those tools in place that can help you do that. So you can scale and you're ready.
Automate, yes, automate the inventory syncing, automate the cogs posting, automate, landed cost tracking. Yeah, those are really, really big things to, yeah, the business growth for sure.
Yeah. Yeah. Let's see, do we have another question? When shipping costs are in an order, when shipping costs are in an order, I'm assuming they mean sales order, but maybe
Mhm.
purchase order, but we'll say sales order. How would you divide those shipping costs into the items? So maybe they are talking purchase order. If they have different costs, say an item is $89 and another is 5, would you divide each of the shipping fees into the cost of each item by how many items, or would you shipping cost go into more expensive? Oh, this is such a good question. I mean, it's done manually, but do you want to explain how you do it in Finale? Because Finale has several options of allocating.
Yes.
They call it allocating those
Mhm.
landed costs into the
Yep.
product cost. And I'll let you tell them how the different ways and why you Finale is great because they help you determine it's not the same for every business, right, Madison? It would be
Right.
different depending on the business. And so I'll
Right.
let you explain the different kinds.
Yeah, no, you're exactly right, Carly. So Finale does have multiple allocation methods when it comes to adding your shipping costs and your adjustments to your purchase orders. So we can adjust, we can allocate equally, we can allocate by quantity, we can allocate by volume, and we can allocate by subtotal. So if your more expensive products are carrying more of the shipping costs, we can allocate by subtotal, which will land that shipping cost higher on the more expensive item. If you're maybe doing, and I'm no freight expert, but maybe like freight container shipping, and the bigger your product is, the more of that shipping cost it holds. We would want to allocate by volume. That way, the larger product is holding more of that shipping cost weight. And then we also have, equal distribution. Maybe, you're selling widgets, all the same size, shape, weight, and they all get the same, same shipping cost allocated, but we can do it equally as well. And then quantity too. So if your freight forwarder, whoever it is, your freight provider, they are charging you more for the more quantity that you have, we can allocate based on quantity so that the product on the order with the highest quantity gets the highest, shipping cost, and then it flows down to the rest of them. But yeah, I'd love your input on that, Carly, and kind of what
Yeah.
you see.
Yeah, and this is such an enlightening question because it's important to think because I worked with a client who did a big shipping container, like you said, and they had
Hmm.
bikes on there, but the shipping container also had
Mm-hmm.
just some helmets, right? Well,
Hmm.
so they weren't thinking in the tool, right? They just whoever was running the tool, they just did it by quantity or something. So it was a huge, they were landing a tariff, I think it was. So it was a big amount. And it changed the cost of the helmet. So all of a sudden the cost of the helmet went
Extremely.
from like $2 to like 300 because that shipping should have gone more to the bikes because that carried the heavier load of it. So just
Right.
understanding, and it could be different from a shipping to a different one. You don't have to do it all the same just because it's how it
No.
works with this PO or this vendor. It might be different with
Hmm.
another one depending on what you're ordering. I mean, we've got clients ordering stuff from hundreds of vendors, right?
Yes.
So it's hard to pinpoint it into one. And this is again why you've got to make sure those processes are written out and everyone understands how are we landing these costs for these items with this vendor? How are we
Hmm.
managing it with this one? Who's doing it? Because like I said, the client I was working with, they didn't know. They just were like, oh yeah, we just put it on the line on the PO and didn't realize they needed to allocate it differently. It wasn't written out anywhere. There were no standard processes for that person to follow. And there was no ownership on who actually put the costs in there. And then on top of that, as the accountant, I didn't realize they were landing those. So I was taking the tariff and I was expensing it straight to the P&L because they didn't tell me they were landing it. So now what happens, Madison, if I already put it on the P&L and they put it in they land it to the product cost, where am I going to see that expense again? Through COGS, right? Because now it's part of the product cost. So then when it
Yep.
I'm now a double counted COGS pretty much. It's gonna so your P&L, your margins
Right.
are off. So but it was just because that person didn't know how to put it in. There was no standard operating process written out.
Right.
They didn't inform the accounting piece because you got ops and accounting a lot of times. It's broken up.
Yep.
Didn't understand that they were landing that, so we were expensing it. So there was no like communication and lines. It's just yeah. Structural gaps, you guys, structural gaps. And it's so fun because sometimes people don't know what they don't know, Madison. Literally,
Yes.
they didn't know what they didn't know.
Yes.
Sometimes it just takes time to think through it. And,
Hmm.
only because I have ran a business and taught entrepreneurship, we don't want to think about that stuff, right? We want to create cool products and we want to sell them and see how much we're going to make. Like who wants to worry
Hmm.
about all of that? You really don't want.
Right.
But all of a sudden your margin, you really have to, or heck, don't find someone in the business and give them that ownership. Assign it.
Exactly.
Someone's got to take that ownership and understands what's doing. Write out those SOPs. And if you don't want to write them out, join us. We'll help you. We'll talk through it. We'll write your SOPs. We'll help you find those holes and those gaps because everyone has them,
Absolutely. 100%.
right?
No one is alone in these
No.
are, I feel like, very universal issues across, I feel like, a lot of e-commerce brands.
Yeah. Yeah. And as more and more people are selling on more and more channels, right? And
Hmm.
then you're buying from, it just can get so complicated.
Yes.
It really can. And then
Absolutely.
I've also seen, I don't know if you've seen this as you start with a client that doesn't,
Mhm.
not in Finale or not in a tool. Maybe they're in 3 or 4 different places. So just trying to bring all the data into one is exhausting. Maybe that's what the first question was. How do I save time? Maybe she's looking at a
Yeah.
spreadsheet for this, and then she's in a
The
different
Amazon looking at her
tool.
sales
Yeah,
and QuickBooks
Shopify
looking at the
looking at this.
financials
Yeah. So we're spending hours just pulling data to
to
try
try
to
to
come
connect the
up with a
dots.
number. So it's so relieving to have everything in one system. All your purchasing's there, your sales are coming in. So we can just go to one place and have that as the source of truth when it comes to inventory. Oh,
Hmm.
it's such a good feeling for sure. Ooh, we got another question. How does the data update in the system?
And
Hmm.
does data update in the system? I'm assuming we're referring to Finale as the system, but as far as Finale goes, we are pulling in data from your sales channels every 5 minutes. We are also syncing with QuickBooks every 5 minutes. So that is about as close to real time as you can get. So you can imagine your sales order comes in, it's shipped, Finale records COGS. We send that COGS entry to QuickBooks within 5 minutes. So there kind of eliminates that gap with that manual reconciliation and kind of match up your operations to the accounting when you have a tool that is kind of doing that already automatically for you in the background as you do your day-to-day operations in the system. So as you receive purchase orders, your inventory asset gets increased. You don't have to go into QuickBooks and increase do a journal entry and manually increase your inventory asset. Those kind of manual aspects are taken out of it when you have a tool that is updating, like I said, every 5 minutes. I mean, it's pretty real time as I think you can get nowadays.
And on that purchasing side, so on the sales side, it is pulling it from the channel. So you don't really have to do
Mhm.
anything. If the sales orders are coming in, it's doing things. But on the purchasing side, you do have to enter the purchase orders, right? You have
Right.
to receive them, you have to land your costs. So like as long you have to do that manual stuff, but the system is right when you put in that landed cost, this is the wonderful thing about Finale too. Although it bugs some accountants, but maybe because I'm more business minded, I love it. You go in and land a cost, you know what Finale does? It automatically updates COGS that maybe already happened, fixes it. It's like magic. Recalculates it all, recalculates the value of your inventory, syncs it all over to the books. It's fabulous because a lot of times people can't land a cost for months, right?
Right.
So it's pretty automatic. You go in, you put it in there,
Mhm.
it recalculates the product cost, recalculates COGS, sends it over, bing, bang, boom. I mean, you need to understand what's happening. So a word to the wise, don't try to map Finale or any tool or connect it to a system like QuickBooks unless you fully understand what's going to happen because it can be I want to say it's magic, but it can also be a disaster if you map it to the wrong place or don't understand what's going to happen. I'm sure people have horror stories, but if you do it correctly, it is like magic. And it happens automatic for the most part.
Especially too, if you work with the Ledger Gurus team to help with that QuickBooks mapping and that implementation, you are literally set up from success to, set up for success from the get-go with them. So
Yes,
totally,
I love it. We do
yes.
really work good together. Finale makes sure the operations comes in, that they understand to use the tool, help it get connected, and that the financials look good. Love it.
And Ledger Gurus helps our clients understand what's going on in their financials, what they should map to QuickBooks, what they should be syncing, should they be landing their costs this way? Are their current product costs accurate based on, what they've entered before? I like you said, definitely a dream team here. And I feel like with Ledger Gurus on the accounting, Finale on the operations, we are able to work together and give them accurate numbers, accurate margins, a centralized system, just accuracy, efficiency all around.
Yeah. And I love that you said efficiency because it might be a lot of work at the beginning, but you want to make sure it's done right. But in the end, it's going to save you time across operations to accounting, and it's going to align it all. And you can truly look at your financials and see the big picture. It tells the story, and you can make those good decisions that you need to. Yeah.
And feel confident with it too.
And we just want to help everyone, don't we, Madison?
We do. We do.
Help.
Main core is helping people, right? Helping
Yeah.
people in all aspects.
And understand. Yeah. Because we've seen a lot. And we love to learn. Do we know it all? No. There's many times I'm like, geez, I don't know. But we always can figure it out together with clients and help it work for them. So I knew this was going to be fun, Madison. I did.
Everything with us is fun.
Yes, I will have to give Nielsen a hard time for not being here. But other than that, this was fun.
Absolutely.
Ladies, thank you so much. Oops, I seem to be a ghost. I'm not on there. Oh, well, thank you so much. This has been absolutely delightful. And I'm so glad that we were able to have you guys and your expertise and everything. Thank you.
Thank you for having us.
Yep. Bye, everyone.
It was a pleasure. Have a great day, everybody. Take care.